for this particular index, the major hurdle is 57,900 to 58,000, and the immediate support or cushion is seen at 57,000 to 57,100. We've got Nilesh Jain, who's a head AVP Technical and Derivatives Research, Equity Research at Centrum Broking, as well as Raghavendra Kedia, who's the founder, Prosperity Advisors. But before we come to you, gentlemen, we've got an exclusive to talk about. And pay attention to what's on the bottom of your screen, because news breaks there. First, this has to do with the use of artificial intelligence by the RDAI. And of course, we'll get you more details on that in just a bit. But more importantly, there's another exclusive that I want to talk to you about, and that has to do with Reliance Industries. Now, this is one that we'll come to in a bit. Let's focus on Reliance Industries, because remember, the AGM for Reliance Industries is tomorrow, and sources have told NDTV Profit that Reliance is set to file its DRHP for the mega Jio IPO before its AGM tomorrow. Nimit has this report.
And here we're at the gateway of India, which is ironic and symbolic because one of India's largest telecommunication players, Reliance Jio, is opening its gateway to the public capital markets. We understand from our sources that Reliance Jio will be filing its DRHP with SEBI before Reliance Industries annual general meeting tomorrow. We understand that starts around 2 p.m. So we're looking at an afternoon filing. Now what we understand from our sources is the issue size is going to be about 33,000 to 40,000 crores, the largest in Indian capital markets history. The valuation that's going to be looked at is about 10 lakh crore to 15 lakh crore. Now, who is executing and how much they're exiting to is still unclear because we're still at an early DRHP stage. But we understand from our sources that Google and Meta, which combined own about 17% of Jio and have been early backers of the telecommunication giant, will be looking to sell some part of their stakes. Now, remember, the total issue size comes to about 2.5%, which is well under the relaxed public float norms that were thrown out by SEBI earlier this year, and we're looking at a filing tomorrow.
Thank you, Nimit, for that. I mean, this is the second one back to back. It was Newsbreak confirmed with regards to NSE DRHP that is being filed, and now there are sources indicating to Nimit that Jio will be filing their DRHP papers as well, and just ahead of the AGM, which is slated tomorrow. What is interesting is the counter impact it could have with regards to a Bharti Airtel as well, because the kind of valuation that you're talking about for a Jio, does that mean that there is a re-rating possibility coming in for a Bharti Airtel?
Positive or negative?
Positive, absolutely positive, because the valuations are absolutely stretched in terms of Jio. So there will be a catch-up that Bharti Airtel that it would have to play. In fact, let's get in Raghavendra Kedia to talk to us about it as well. Raghavendra, good afternoon and welcome. My question to you is your initial comments when you talk about, Jio, the IPO that could be filed, the DRHP that could be filed today ahead of the AGM, and its counter impact. I'm not talking about a Vodafone. We'll just stick to a Bharti Airtel with the kind of catch-up that it will have to play.
Good afternoon. Here, broadly, if this announcement in regard to Jio Telecom IPO comes through, that will definitely be a big positive for Reliance Industries. And specifically, focusing on Bharti Airtel, we believe that the peer valuation would actually give some leg up to Bharti Airtel, which is currently trading at 1860. So on a valuation basis, the investors might look at Bharti Airtel as a cheaper candidate in terms of the P multiples and valuation metrics. So we expect in regard as a special situation trade, where even Bharti Airtel could be a trading buy considering the upcoming IPO of Jio Telecom, the valuation metrics. So there could be a catch-up play in terms of valuations, and a 8 to 10% upside in Bharti Airtel in the weeks ahead can be expected if the IPO goes through as expected for the Jio Telecom.
That's with regards to Bharti Airtel. Nilesh, what are charts indicating for a Bharti Airtel? And you have some bit of respite that did come in for a Vodafone in between as well. So if you have to look at both of the charts, what are you picking up?
Very good afternoon to Hiral. Well, structure-wise, the idea has witnessed a very strong run-up recently, and given the kind of formation of high top and high bottom, Idea definitely looks stronger, and we can expect further upside to continue towards 15.5 to 16 going forward. But yes, coming to Bharti Airtel, we have seen a very good base formation at the current level. We can expect a follow-up towards 1920 to 1950. Now, 1950 is the long-term 200-day moving average, which we believe is likely to be tested going forward. So, overall, buy and decline is the structure for Bharti Airtel as well as Idea.
So that's with regards to where the telecom space goes. But moving on, Nykaa has actually laid out an aggressive FY30 roadmap targeting $5 billion GMV and a 2.5 to 3 times revenue growth with tier 3 markets. And they're looking at offline expansion that will drive scale. Stock also near the day's highest level, 6.5% up move coming in there. Mahima standing by with us to tell us more, because this is, actually the stock of the day with the kind of returns that we are seeing. Mahima, over to you.
Right, so Hiral deserves that kind of an uptick in stock, right? Because tall guidance given by Nykaa, and this is a long-term guidance for the next 5 years that they've laid down. Now, in terms of the gross merchandise value growth, they aim to become more than $5 billion in terms of GMV by FY30. That means that they'll scale at least 2.5 to 3 times from the current scale. In terms of the two verticals, beauty is expected to grow around 2.5 to 3 times, and fashion more than that, 3 to 3.5 times, because they believe that there is more runway of growth where the fashion business is concerned. With regards to financial growth targets, they're aiming at around 2.5 to 3 times growth in terms of revenue. That's the same as the gross merchandise value, but that will translate to 4 to 5 times growth in terms of EBITDA for the next 5 years, that is by FY30. Early to mid-teens EBITDA margins is what they're aiming to reach 1,000 plus global brands from 600 global brands currently. Operating cash flow is going to be 5 to 6 times the free cash flow that we are talking about, and to go to 40% plus ROCE by FY26 versus that of 21% in FY26. Now, in terms of House of Nykaa, they're expecting a compounded 30% CAGR and should reach 5,000 crore by FY30. The second interesting aspect that I found in the investor presentation was with regards to the online and the offline mix. Currently, the online mix is around 83% versus offline at 17%, but that should change by FY30. More contribution coming in from offline business to almost 30% versus that of 70% coming in from online. So their focus now remains more in terms of store expansion going forward, and offline sales should increase to 30% from 17% currently. The next one is the superstore business, where EBITDA break-even they want to achieve by FY30. 3,500 crore plus GMV by FY30 is what they're aiming at, and 3 to 5% EBITDA at scale is what the aim is. In terms of expansion overall, the strategy is that from 12,500 pin codes in FY26, they want to go to 19,000 pin codes. In terms of city expansion, from 1,250 in FY26 to go to around 3,500 by FY30. With regards to the tier-wise gross merchandise value concentration also, this is also very interesting that I found, because by FY30, tier 3 is where the contribution is going to increase from 68% to 75%. What they're aiming at is that tier 3 plus cities is where 75% of contribution is going to come from, tier 1 around 7% and tier 2 around 18%. Lastly, in terms of Nykaa fashion, top line NSV ambition, so that's the net sales value ambition to scale by 3 to 3.5%. Key brands to grow faster and account for 65 to 70% of the business. 70%, of course, in terms of high single digit EBITDA growth by FY30, 10% plus EBITDA margin by FY30 is what they're aiming at for the fashion business. So this is the overall view and the overall guidance given by the management. And like I said in the start, it's a tall guidance that they've given for the next 5 years.
Absolutely, a very tall guidance that has come in there. But before we talk about Nykaa with any of our guests as well, Nilesh, I would like to know your top picks with the way markets are performing over the last couple of days, because there is absolute amount of consolidation that we're seeing. Outperformance coming in from your banking space as well, which is trying to, and especially your private banks are playing a catch up with the kind of returns that the PSU banks have given. So anything that you have?
Well, absolutely, Hiral. So we have a couple of buy recommendations. First of all, Radico. So a very good setup, a strong setup, I would say. We have seen a strong momentum recently. Today we have seen a fresh breakout in Radico. Even if you see derivative data, a very strong build up on the long side. So we are expecting a follow up in this particular counter towards fresh record high from here towards 3800 to 3850. So these are the two targets on the upside, and 3640, that will be the stop loss for Radico, and it's a buy. Now apart from that, another stock that we are liking is GVTND. So a very good setup in GVTND, a good build up again on the long side, close to 2% fresh OI addition. So GVTND is a buy for upside target of 5400, and stop loss can be placed at 5150, 5150.
So that's with regards to where GVTND goes. In fact, Raghvendra, a quick view in terms of Nykaa as well. I want basis the guidance that they've given over the next 5 years, and if you have to look at the valuations as well, would you say there is an opportunity right now on that one? And secondly, Bata India, where they've now appointed Sanjay Rao as MD and CEO. He will be stepping into the role of CEO and whole-time director effective the 24th of August 2026 and assume full responsibility as managing director from the 1st of October 2026. Now he'll be succeeding Gunjan Shah, who's completing his 5-year leadership mandate as well. Now if you have to look at both these counters, because they come from somewhere from the consumption side of it, that's the reason I ask on both of these.
Here, let me start with Nykaa. We are comfortable in terms of the management because they have walked the talk in the previous few years, and the earnings growth continue to be north of 20%, which is very comforting. Now they have crossed a revenue of 10,000 crores, which is a milestone. And so from an investor point of view, we do continue to like Nykaa. And this company, if you see in the last few years, have transitioned itself from grow at any cost to a profitable online platform. And if you see the recent results in the commentary, they are also transitioning to tier 2, tier 3 cities. So it will be soon a pan-India player with a very huge economic mode. So Nykaa, for a 1-year investment horizon, a 20% moderate upside is possible for a target of around 360 at current levels. We are happy with the management commentary and the expansion plans. Now, in terms of Bata with the new management, we believe that in the past there has been very good evidences or where coming off a new MD and few changes they have gotten into would actually pave very good growth. Good examples have been Saregama or Bajaj Consumer Care, specifically in the FMCG space. So we believe that there could be some freshness of ideas, some expansion plans. So Bata India could also be a good play to bet upon from an investment point of view. Usually these management changes for the results to fructify takes 2 to 4 quarters. So rather than a trading bet, it would be an investment horizon for 9 to 12 months at 760 levels. We do continue to like Bata India and upbeat about the new MD.
About the new MD. Nilesh, quick one on the charts. Opportunity to book profits at with a 13.5% up move on a Bata India, or would you say there is a still entry level that you're seeing with good momentum picking up?
Well, Hiran, if you look at the broader structure, the counter has been in a declining trend since a long time. In fact, if you pull up charts since 2021, in last 5 years, we have seen a continuation of a lower top and lower bottom formation. So counter is no doubt trading in the extremely oversold territory, and today we are witnessing a pullback move. Quite possible that pullback may extend towards 800 to 825, but not advisable to chase the momentum at the current level because the risk and reward is not favorable. So ideally, one should wait for a dip maybe towards 740, 730. That can be a good entry point. Keeping a stop loss below 680, then it can be bought, but not at current level. It looks slightly overbought.
Okay, so that's with regards to where Bata India goes. But moving on, you know, the defense sector has been in focus. Let's just pull up the intraday defense chart or even a 5-day chart to see the kind of gains that are coming in on this front. In fact, good momentum that has been built up. Right now, from the day's highest levels, it's given up some gains, but 6.5% in the 5 sessions is what we've seen in terms of defense. Now, Krishna Defense, which has now seen a strong run of nearly 96% in 6 months, nearly doubled in 6 months. That's being backed by a strong order win and robust earnings growth as well. The company has recently secured a 45 crore defense contract from the Ministry of Defense, which could actually significantly boost scale and margins. To discuss in detail on the company's growth outlook, we are joined by Ankur Shah, Managing Director at Krishna Defense and Allied Industries. Ankur, good afternoon and welcome to the show. It's always a pleasure to speak to you. This is Hiral on this side. My question to you first is if you could just help us understand more details of the recent 45 crore order win that you've got in terms of lots brewing on this front as well. But thank you, Ankur, so much for joining in. It's always a pleasure to speak to you as well. So that's the management of Krishna Defence. Let's pull up the intraday chart as well and see what's happened to that counter. Still trading slightly at the day's lowest levels, trying to get that marginal pickup. But a 30% CAGR over the next 3 to 5 years is what they're looking at. Nilesh, on the charts, if you have to look at the defense pack, last couple of trading sessions have been really strong. Are you seeing any, stocks from this sector where it could be a good investment bet right now?
We did see a very good pullback move in last couple of trading sessions, but if you look at stocks like Mazgaon Dock, HL, BDL, all are witnessing some bit of profit taking. But I have to pick any one out of all, then it would be Mazgaon Dock, which is on the verge of a breakout from its 200 moving average. So just in case if it breaks above 2560, then it's a buy for the upside target of 2700 to 2800, and then stop loss can be placed at 2400. So it's a kind of a buy and decline structure. Another stock that I'm liking is Bharat Electric Limited, BEL. A good base formation, and we are witnessing a good breakout as well. So keep an eye on Bharat Electric Limited for upside target of 440 to 450, and stop loss can be placed at 418.
So that's with regards to where the defense pack goes. Raghavendra, your view in terms of the defense sector as a whole, are you seeing any opportunities in the private defense space versus the PSUs? Because PSUs, the question has been, order books are really soaring. However, it's mainly execution which is becoming a back burner, and that is not really translating into revenues and profitability to that extent.
So, that's a very valid concern in terms of the PSU defense stocks like Hindustan Aeronautics, Cochin Shipyard, Mazgaon Dock, Bharat Electronics. But in the entire defense space, from the government side of owned companies, our topic continues to remain Cochin Shipyard at current levels of 1460. We believe that there could be some execution pop in terms of getting the backlog cleared in terms of the order book. So Cochin Shipyard from the government PSU side of defense companies, and on the private space, we do like the stock we just discussed, Krishna Defence. The revenue has been growing at around 70%. The PAT has gone up by 26%. Management is there is no debt in the balance sheet of the company. So, and they have a very established product. So even at levels of 1300, where the stock has doubled in the last 1 year, we still believe that if someone is willing to hold it for a 12-month investment horizon, this debt-free company, which has actually delivered 25% north of PAT, 70% revenue growth, continue to do well. And if they, by any chance, get export orders, that could be another leg up in the rally. So Krishna Defence on the private defense space and on Cochin Shipyard on the government-owned defense space are the two stocks we continue to prefer.
So that's with regards to where the defense pack goes. But thank you, Nilesh. Thank you, Raghavendra, so much for joining in. It's always a pleasure to speak to both of you as well. But moving on, my colleague Samit Sarkar joins in with all the chatter from the dealing room. Samit, good afternoon. What do you have on your cards today? Because it's a very interesting day of trade where a lot of stock-specific action is what you're seeing.
Yes, a lot of stocks have been in focus, though index has been largely muted in trade. But yes, a lot of stock-specific action is what we are seeing. Firstly, it's Kirloskar Industries, where dealers are indicating that there are buy flows on the large HNI and the PMS desk. Dealers indicate that an announcement regarding the family settlement is expected to come in anytime soon. So keep an eye out for Kirloskar Industries in trade. For Paytm, at one point of time, the stock had fallen as much as 5%. Now, dealers indicate that this was largely owing to a rumor of a block deal that could be happening on this counter, but there is no confirmation regarding the same so far. For Shell Engineering, nearly 0.9% of the equity changed hands in trade today, and dealers indicate that either Bandhan Mutual Fund or a promoter relative was seller in trade today. So it would be important to track the bulk and block deal data that comes out post-market when it comes to Shell Engineering. The stock had fallen nearly 8% at one point of time. When it comes to Northern Arc, there are sell flows on the HNI desk. Dealers expect a large block deal very soon. Around 7 to 8% of the equity might change hands via block is what dealers are indicating. And lastly, for Adani Power, there are buy flows on the institutional desk. Dealers indicate passive inflows coming in owing to weight adjustments. Now, do remember that Vedanta has moved out of Nifty next 50, and because of that, the weightage of Adani Power could increase, and hence this passive inflows might be coming in when it comes to Adani Power.
Okay, so interesting names that you're watching out for as well. Thank you so much, Somit. I would want to discuss a few of these with our guests as well once we have them. But it is going to be a Paytm is seeming very interesting, Northern Arc and Adani Power. But moving on to Mumbai's water stress. That is actually hitting the real estate sector pretty hard. If you'll pull up the intraday chart of Nifty real estate, or I would say actually a 5-day chart to see the kind of correction that has come in after the surge that we had seen, that will tell you as to what's happening. In fact, the other thing that has happened is your tanker rates are shooting up after the BMC supply cuts, and the builders are warning of a sharp cost spike ahead. Ridhima joins us with what's driving the surge and what it means for projects. Ridhima, good afternoon. What do you have for us?
So tanker rates have shot up after the BMC water cut due to delayed monsoon and water shortage. So tanker rates have moved up by 200 to 500 rupees since last week, and they could move to 2 to 5 times. This is as per the tanker sellers, the suppliers, and also the real estate developers. Now the non-potable water will cost you around 1800 to 2000 rupees, up from 1500 to 1800, around 10 to 30% of rise. And potable water, which is a drinking water, has gone up to 2500 to 3000 per 10,000 liters, up from 2,300 to 3,000 per 10,000 liters, and this is a percentage increase of 6 to 25%. And the main reason behind this is that BMC has cut the water supply to the construction sites, which has put a pressure on the real estate sector, and due to which the real estate sector has been impacted. And this is mainly happening because of the delayed monsoons and the water levels in Mumbai, which have dropped to 10.35% as per the report by the BMC. Now the real estate sector is getting impacted as a non-potable water, which is a borewell water, is used for the construction purposes and all the curing process and the other building processes which is done in the real estate sector. And the potable water is used by the real estate workers who work at the construction sites, and this could hamper their project execution timelines and also affect the margins of the companies. Now remember that real estate sector is already facing issues since the year begun. It started with elections where reverse migration happened, and that affected the project timelines, and also the tile and the cement prices, which affected and put pressure on the construction costs for real estate sector.
Ridhima, for that, and that really sets up the conversation well. We have Ram Raheja, MD at S. Raheja, and Prashant Thakur, Executive Director and Head Research at Analog Group, joining in. Welcome to the show, gentlemen. Prashant, let me take my question with you first. To understand the overall impact, if you have to look at the Mumbai MMR region, because we're talking about a cut that has already come in. We did speak to the management, for joining in, Prashant and Ram. Always a pleasure to speak to both of you. We'll quickly slip into a short break. On the other side, we get to your top buy today and sell tomorrow picks as well. Stay tuned.